Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of corporate filings. Today we're diving into a report that, let's just say, has a few more twists and turns than your average oil well. We're going to dig into Gran Tierra Energy's latest quarterly report and see if there's more beneath the surface than just black gold. Gran Tierra Energy, a company focused on oil and gas, just released their report for the quarter ending in March. The big question we're trying to answer is, how are they doing? What is the story behind these numbers? Let's jump straight into the numbers. Their oil, natural gas, and natural gas liquid sales totaled about $170.5 million. Now that sounds like a lot, but is it good or bad? Their interest expense, what they pay on their debts, is $23.20, and that's a pretty big chunk, and it shows they've got some significant borrowing costs. It means they are paying a lot for the privilege of using someone else's money. Ultimately, Gran Tierra ended up with a net loss of about $19.3 million. So after all the sales and expenses, they still ended up in the red. That's not great, but let's see if we can understand why. Another thing to consider is their earnings per share. It came out to a loss of 54 cents per share. This is basic, it does not tell us enough. Did the number of shares change, etc.? Now let's quickly look at the balance sheet. Here we are interested to see if they have the capacity to continue operations. Cash and equivalents is at $76.6 million compared to $103.4 million at the end of the previous year. This means they've spent more cash than they've brought in. They're also sitting on quite a bit of long-term debt, over $726 million. That's a big number for a company with about $1.7 billion in assets. It's like having a huge mortgage on a house with a leaky roof. Okay, so their net loss does not tell us enough about their ability to generate cash. To clarify, their net cash from operating activities was $73.2 million. This means they can actually generate cash, but they are spending it elsewhere. Where is all that money going? Well, they spent $67.5 million on property, plant, and equipment. These are investments into future production, so the company is growing. Finally, we see a significant outflow towards repaying debt for $24 at the and Ake refer purchasing shares for $2 million. Okay, let's shift gears and look at how the different parts of Gran Tierra are doing. Colombia leads the way with $117.6 million in oil, natural gas, and NGL sales, while Ecuador brings in $21 million. Canada, a more recent addition, is at $31.9 million. Canada. A more recent addition is at $31.9 million. Canada, a more recent addition, is at $31.9 million. Fellow the Colombia does not look good. In the previous 3 months, Colombia generated $119.3 million, so there's been a drop of $1.7 million. It's a different story with Ecuador. In the previous 3 months, it generated $9 million. Now it's at $21 million, a healthy bump. One last thing from the segmented report, you need to notice non-segmented expenses. General admin interest derivative loss totaled around $112 million. While this is normal, you need to keep an eye on this and ask yourself if this is what is expected for a company of their size. Now let's talk about taxes. Always a fun topic. They've got a bit of a dance going on here with taxes receivable, meaning money owed to them, and taxes payable, meaning money they owe. They have taxes receivable for $20.7 million and long-term income tax receivable for $4.6 million. It will take time to get those back. Time to talk about debt. It's a big part of Gran Tierra's story. They've got senior notes, essentially IOUs, coming due at different times. They tell us all sorts of details about interest rates. In this case, we see how they amended their credit facility after their i3 Energy acquisition. The credit facility gives them extra cash, but they still have to pay it back. Time to dig into their shares outstanding. To keep things simple, Gran Tierra uses different ways to reward their employees, including stock options. The good thing to pay attention to in this part of the report is seeing how many shares they use for that, or how much they pay, since that can reduce investor equity and profit. Okay, let's break down where their money actually comes from, and not just where their operations are located. We see it as all mostly crude oil revenue for all countries. No good filling is complete without the risk factors. I encourage you to look at them yourself. There are many deploy of political instability, grow activity, and strikes, come commodity prices and supply IA, and a lot of DBT. Now, for anything that happened after the quarter ended, we need to see if anything big happened. On April 16, 2025, Gran Tierra secured a new $75 million lending facility set to mature in 2028. On top of everything, they got more debt. Well, what does it all mean? Gran Tierra Energy presents a bit of a mixed bag. Here are my opinions. Positive things: oil, natural gas, and NGL sales still occur. Positive things: secured a new credit facility which gives them more means for future operations. Negative things: a net loss Calian. Negative things: high levels of debt, which has high interest. All negative things. Colombian unrest. All negative things. Reliant on oil markets. Ultimately, Gran Tierra has a chance of success, but is very risky. Their stock prices may either go up or down depending on the market, etc. Be careful and consult a certified financial planner if you are uncertain. Thanks for watching. If you enjoyed, please subscribe, like, and comment.